Now, the BRVM 10 index closed trading on Wednesday at 244 points, up 2.4%, while the all-share index, the BRVM Composite, was up 1.7%, closing at 216 points. The value traded on that market was 2.1 billion CFA francs, while the currency currently trading at 508 CFA to the US dollar. Moving on to Ghana, we saw the market slightly lower, down 0.2%, closing at 1,867 points, keeping its year-to-date change at 55%. On the other hand, the GSE Financial Stock Index closed at 1,659 points. That was up about 0.1%. Year-to-date, that index is up just under 60%. And moving on to Nigeria, of course, the markets were closed on Wednesday because of the Democracy Day celebrations in Nigeria. But on Tuesday, we did see the market shed a little weight, down 7 basis points, closing at 37,358 points. We did see quite a few gainers across the sectors, the likes of MC Nichols, IPWA, Prestige, Insurance, and 7up. Let's move on to Diamond Bank, where Boyega Adebajo, Head of Structured Finance and Advisory, is standing by to give us some thoughts on the market. Boyega, thank you so much for joining us. Of course, the big news is the issue around democracy, and maybe I want to get your thoughts on the impact of democracy, particularly over the last 2 years. If we're assessing the president, we've seen the market up about 46% since May 29, 2011. So your thoughts on how will you assess this administration's impact on the capital market?
Well, first of all, the administration will impact the market through certain types of certain specific agencies. We all remember what happened last year with the National Assembly and the SEC. I think keeping the DG of the SEC there has shown some degree of stability, and the SEC itself has come to very interesting grips with what the Nigerian Stock Exchange is today, and the crop of ladies and gentlemen at the exchange running it are doing a very good job of it. So that's one pretty important thing. There's been a lot of stability with the regulator, so that's worked well. On the other side of it, you want to look at the impact of the pension funds. Recent regulations have increased the percentage of equity they can hold in their portfolio. So we're seeing a lot more local money going into the market, which is a good thing for us because it also has a long-term perspective. And I guess all that stability has come to play in terms of returning confidence. And that's what we're seeing in the first few months of this year.
And perhaps something that would impact the market going forward is the impact of the sovereign wealth fund, $1 billion to be invested, and we hear that quite a bit of that may be coming to the stock market. Your thoughts on the impact that the sovereign wealth fund could have on this market?
Again, it becomes local money, stable money, long-term money, and that's always what a market wants for stability. It'll be interesting to see the guidelines in terms of what kinds of stocks they will invest in. But you will want to think about it that we also have a side of the market other than equities that need some degree of development, and that's in terms of fixed or variable income bonds. Right. And that's really where some of us would like to see the sovereign wealth fund play.
Right, and staying with the market, clearly it's a bit of a lull period with respects to results, but we expect things to pick up a little bit when the insurance companies begin to release numbers. And so far we've only seen Mansard Insurance reporting. Your expectations from the insurance sector?
Well, you know, like I've always said, things have actually been dull in that sector, but of recent, some activities in terms of mergers, combinations, and some pretty new players like Old Mutual stepping in and wanting to pick up some degree of market share. I guess these are all reasons why we're seeing some delays in terms of what the figures are like. But pretty soon, there'll be a pack of insurance companies pulling away from the rest, and we'll clearly be able to say these are the market leaders and these are the laggards in that sense.
I know you've been
yes, we're all waiting to see what
I was going to say, I know you've been pretty bullish about the sector. Are you still quite bullish? We haven't seen it perform pretty well. It's underperforming the market so far. I think it's only up about 15% year to date.
It's essentially because, like I said, there have been combinations, and you've got some new players coming in and taking up some of the old companies. And what I said earlier is just what it's going to be. The leaders, the more aggressive ones, are going to pull away from the rest of the pack. and we're going to start to see the insurance companies that are worth investing in. That will come to play, definitely.
Right, okay. If we move on to the power sector, we're expecting some activity in that space after the federal government released information on the bids for the Kaduna and Afam assets. So your expectations on the activity we're going to see in that space? Clearly, a lot of money has already gone into the sector. Quite a bit more is going to come in.
Yeah. Well, it's the funds in there right now, an interesting mix, some offshore funds and pretty much a lot of local funds. What we know for certain is that, there's not enough capacity on the balance sheets of onshore banks to deal with the funding required there. Beyond acquisition of a lot of these gencos and discos comes the maintenance and comes the revamping that is required. So that's also going to take a lot of money. And I feel it will then be a chance to see what the advisors are going to do in terms of how to raise these funds, whether we're going to see some spin-offs in terms of corporate bonds or whether there's going to be some equity offerings to bring in new investors. Perhaps those who lost out on the bid may get a chance to put in some money, but with not enough money to go around on local balance sheets, we need to see something flowing in from the